What's up, family? I'm going to try to make this video short. And this is a follow-up video to a call that we had today in Sunday Study Group, where we are going through the PD array matrix and we're recording those calls. So when people come into the community and they're just learning ICT, they have those videos to reference as it relates to understanding the PD array matrix. And you'll say, what is a PD array matrix? Well, the PD array matrix is what ICT created when, when the market is bearish or bullish, there are these different PD arrays that you can look for. And so since we're only covering these PD arrays on these calls, when I stopped recording, I started talking about an inversion fair value gap and also a BPR. And Marlon was in the chat and he was like, man, this should be recorded. This is gold. So this is for you, Marlon. All right. So one of the things we talked about was the inversion fair value gap. And the inversion fair value gap and the BPR generally are higher probability after liquidity has been swept. So in this example right here, it's just perfect. We had, I'm going to say these relative equal lows right here because this had already been swept here. And then we had this low down here. So once price came down here and swept this low right here, and look how it didn't even close below the low. Look at that. When you see these big displacement candles like going down, and then you see price turn around and go skirt, skirt, and turn around and go up, then when it has the audacity to invalidate a bearish BPR, you have an inversion fair value gap. So what's your entry, you might say? Well, you got to be quick draw McGraw. And as soon as you see this candle close right here, I'll make it bigger just so everybody can see it. As soon as you see this candle close right here, you know you have an inversion fair value gap here. But at one point, this whole candle right here was green. So since it was like it was super, super bullish, you can kind of be on alert like, ooh, I see you, I see you. So then when this candle comes down and goes into the inversion fair value gap, you're just ready to pull the trigger. So if you do a market order, that's good. If you have a limit order stage down here and you just drag it up there real quick, that's good. You might have had your entry at 50% of the inversion fair value gap and you would have gotten left, and that's fine too. But that's an inversion fair value gap. And you might be like, well, what's a fair value gap? Well, you have an A candle, a B candle, a C candle, and where these A candle and C candle don't overlap, that's called a fair value gap or an imbalance. And that's a bearish fair value gap. But it got violated with this bullish green candle. So when price dipped back in there, game on, game on. All right. So then you'll be like, well, but I know where to get in. Where do I get out? Well, and where's my stop, more importantly? So you could put your stop below here, plus one tick, and then you can target low-hanging fruit. So you might be like, boom, I'm going to target this high right here, or this high, or this fair value gap, or this high. Or if you're real bold and you got time, I got time today, you can trade it to the rejection block. Ooh, doggy. Not only the rejection block, what you say? 50%. Oh my God. Bertifer. Not beautiful, but Bertifer. All right. So like that's your entry, right? You got your entry, you got your stop loss, you got your take profit either here, 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 here. Or if you can stand this, it ended up running these highs, obviously. But I mean, that's a good day, that's a good payday right there. Don't lie. Don't even try to fib about that. So then over here, I'm just going to point this out as well. I'm going to get rid of this. Um, wanted to talk about the BPR. So a BPR, this is for this entry over here. So A BPR is when you have a can't, let me make it bigger. A candle, B candle, C candle, bearish fair value gap. A candle, B candle, C candle, bullish fair value gap. Where these two fair value gaps overlap, you have a BPR. And notice how ICT talks about it'll do a mohawk, that's fine, but the candles tell the story. So it closed back in above the low of the BPR. Then it had a little gap down right to the edge of the BPR again and pew, 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 and it left. So you can target, you can get in here on the BPR, you can get in at 50%. And I don't know many people who would get in at this low, but I guess you could do that too because you're still inside of this full fair value gap over here. And then you got to determine what your risk is going to be. Some people might do 10 points, some people might do the low down here, but that's a lot of risk. So you might do the low right here. You might do the bottom of the fair value gap. I would say it just depends on what your risk tolerance is in this case. So you get in here, and where do you target? You could target here, 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 or the rejection block. And in this case, it would have been nice to just get out at the opening of the rejection block um because it, in this case, it didn't give 50%. And nobody, I mean, nobody wants to be this close up here to 50% or this liquidity up here and then sit through all this drawdown back to your entry. Nobody wants to do that at all. I don't, so that's where we just got to practice taking profit. So that's what I wanted to talk about. And I'm not going to talk about rejection blocks because on our call next week, that's when we're going to be going into that. But I will just point it out here that you got one down here too. Ain't that beautiful? And you got one right here as well. And what's tricky about this, I said in the community chat today that, usually ICT says you don't want to see a PD array, 50% of the PD array violated, and violated meaning like this candle right here closed below the 50%, but it turns out it still worked out. And maybe, we had such a nice fall yesterday that in this case, I'm not even going to look over there to see if there's any other PD arrays, maybe high time frame that this reacted to. But it closed below 50% here and it still worked out is all I'm trying to say there. So that I think that's all I wanted to say on this. We were on the live call yesterday and we were looking at this and like, okay, we're in chop. And a lot of times when you're in chop, you just got to be like, look, I'm not for this. I'm not for the games, and just walk away. But when you know that you're in chop, then the thing is you just have to take short targets, and then you can make your moolah, young moolah, baby. All right, so that's it. I don't want to make this video too long. Marlon, I hope I covered everything that you enjoyed talking about on the call this morning. I'll catch y'all on the call tomorrow and next week. And until then, take good care of yourself and others, and always be cool and stay in trading school. All right. I'm delaying because I was trying to find the stop record. All right. Bye.